We start our calls of the day today with Oracle, upgraded to a buy at Edward Jones. Surat, you own this name. We think shares do not adequately reflect our improved sales growth outlook. We're talking enterprise software here, Surat.
We are. So there's a couple of things there. One is cloud acceleration. The other one is they did the acquisition of Cerner last year. That, I think, is going to be another leg of growth for them. The stock trades at high teens multiple at this point when you compare it to all the other software stocks. So people always thought of it as an old-time fuddy-duddy stock, but it does have growth, and it's fairly priced compared to some of its high-priced competitors.
Weiss, the IGV, the software sector is up 42% year-to-date. The S&P software sector is up 52%. We focus, on the Adobes, the Microsofts, some of the cyber names, the Palo Altos, as we mentioned earlier, and the CrowdStrikes of the world. It's time to get a little more broad in the way you look at enterprise software.
Yes, but
especially related to AI, where consumer has sucked all the air out of the room for the most part.
Right.
Why is Microsoft up as much as it is? Because of OpenAI, which is a consumer-driven.
Right, but exactly, for what it's adding to their product offering, et cetera, and the attraction of being a Microsoft customer. Look, it's important to understand how I manage money. So I'm not, perhaps like everybody else here, that I tend to be more concentrated in my portfolio. As Buffett says, diversification is the enemy of performance. So I tend to be more concentrated. If I ran a more diversified portfolio, I continue to look at names. Software has worked because they're cash cows, high recovering revenues.
Yes.
They have over 100% recovering revenues, which means new products in addition to the customers recurring. There's no CapEx virtually, right? So they're asset light. So for all those reasons, it's attractive. So they don't need, their balance sheets are generally pristine. So that's why they've done well in this environment. And that's why I believe they'll continue to do well, plus the innovation that goes on. So look, the cloud, only 25% of enterprises are in the cloud. So think of everything you need around that. That's software, right? Do you know it takes 20 times as much energy, for example, for an AI search as a Google search, a traditional Google search now? So think of what you're going to need in terms of software products also, not only energy, to accommodate that.
Yeah, well, you said the key words, the recurring revenue model. What about Oracle?
So the challenge that Oracle has had has been the balance sheet, the debt to equity ratio, which is critical to what we do in the quality momentum strategy. The debt to equity ratio is not favorable. I think you would agree with that. That needs to improve significantly. But just collectively overall, when you look at the IGV, I mean, these are the very purest definition of what quality is, and quality is outperforming. Microsoft is 9.6% of the IGV. Adobe is 8.9%. You have Salesforce. You have Oracle in there, but you have Intuit, you have Palo Alto, you have ServiceNow. So I'm not ready to trade away that free cash flow generation in the present. I'm not ready to trade away that quality to go own a longer duration enterprise software name in an environment where the cost of capital is still a moving target.
What about Airbnb, which was named a top pick today at Bernstein? That's yours. The target gets cut by $5 to 163 from 168.
So listen, that's part of the online travel universe. In online travel, the exposure that we have in the strategy is to Expedia, is to Booking Holdings. We also have Marriott. We also have Airbnb. This week is a critical week in understanding what the state of the consumer is, not only now, but what the guidance is going to be. Now, as it relates to Airbnb relative to Booking Holdings and Expedia, there's been price underperformance in the near term. A lot of that is a direct result of management messaging in their guidance that they are seeing demand begin to weaken. I don't know if that defeats overall what is a pretty clean and compelling story for Airbnb. A dramatic improvement in the balance sheet. People look at Airbnb and they say, are they profitable? Yes, this is a company that is profitable. This is a company that's seeing the international expansion. And what's interesting is on the supply side, the supply is now controlled by who? Private equity, which is very interesting. And what that does is it creates a nice equilibrium between supply and demand and also keeps the pricing power present.
Speaking of dramatic improvements in balance sheets, Surat, how you like that Uber?
Listen, they have done everything they have said they're doing. And if you listen to what Joe's saying, if travel is improving, people are going back to the office more. That's right in Uber's sweet spot. And they've really consolidated their businesses into really 3 businesses. And if they actually look at freight and potentially get out of freight, if it's not profitable, it's going to be even more profitable. So I think Uber's in that sweet spot now. They're really accelerating their cash flow.